Welcome back to another edition of the Prepper Recon Podcast. Our mission is to bring you great interviews with preppers from around the world so you can be better informed and better prepared for everything from a hurricane to the end of the world as we know it. Whether your plan is to bug out or bug in, CampingSurvival.com has all of your preparedness needs, including fish antibiotics, long-term storage food, water filters, bug-out bags, and first aid kits. Use coupon code PrepperRecon for 5% off your entire order at CampingSurvival.com. I've been purchasing gold and silver from JM Bullion since before they were a show sponsor because they have the lowest price of any dealer I know of. JM Bullion now offers free shipping on all orders, and Prepper Recon listeners will get $5 off any order over $300. Just go to jmbullion.com and use coupon code PR5 at checkout. Today's guest is Doc from silverdoctors.com. Doc, thanks for coming on the show.
Oh, it's my pleasure. Thanks for having me.
Oh, absolutely. So can you tell us a little bit about silverdoctors.com and how it got started?
Sure. It got started early 2011, so it's been a bit over 3 years. It's a website focusing on finance and economics with a focus on precious metals. Really just kind of a macroeconomic site as well as current events from an alternative Austrian perspective. So that's a little bit about silverdoctors.com. The other founder and myself were both licensed doctors of pharmacy by trade, and the markets and specifically gold and silver were kind of our longtime hobbies, and really it was a lot of personal study due to a love for the markets, and gold and silver is how we got started. So it's kind of a brief overview about how the site started, and it's grown quite a bit from those early days on Blogspot to now, where we have about 2.5 or 3 million monthly hits and top 3,000 or 4,000 U.S. website.
Wow, that's awesome! Congratulations on those stats, because that's a high achievement. You got to work hard to get all of that. Now, if you had a friend ask you why they should buy gold or silver, what would you tell them?
Well, the main thing that I would start off is kind of going to square one and trying to educate them a little bit on kind of the fundamentals of what money is, a history of our currency, the history of gold and silver. I mean, all you have to do is take a look at the collapse in the purchasing power of the dollar since the Fed was instituted 100 years ago. I think it's close to 97 or 98% now, if I recall the exact number. But regardless, it's almost a complete loss in purchasing power. We've gone from, I mean, a 1 ounce silver coin being worth $1 face value to obviously the dollar that the U.S. Mint stamps on the silver eagles now is almost a joke as far as a face value. As far as some of the factors for now, the fundamentals, obviously the current and continuing economic crisis plays a big role in that. The collapse that began in 2007, 2008 really has never ended. It's just kind of been papered over to kind of, whether you like an analogy of just wallpapered over, or a mummy that has a dead corpse but just has nice white linens wrapped around the outside. The debt and all of everything, the derivative crisis that culminated in 2008 really has not been systematically, or I should say fundamentally, solved or fixed. It's just been papered over, and the obligations have been shifted from the large banks to the sovereign governments.
And then, so as a physician, I take it that you don't think the health of the dollar is very good.
No, that's kind of what we named our site after, restoring your financial health. We kind of started it with a kind of a goal and a purpose of kind of helping the average American preserve their financial wealth and their financial health.
And then you mentioned how much that face value of the what they stamp on the 1 ounce silver coin now. I think the original ones were only, it's even worse for them because they were only 3/4 of an ounce of silver content actually on there. And then the gold coins from pre-1933, I've got a gold $5 Indian, and it's done even, it's the gold content in it is even much farther away from the actual face value than even the silver, isn't it?
Exactly. And when you really stop and think about it, one analogy I like to give and to tell people who are kind of new to the gold and silver market is say, think back to when you were a child, and if your grandfather gave you $20, say back in the 1920s, 1930s, what would you have rather had today? Would you have rather had your grandfather give you a $20 paper bill or a $20 gold coin? That $20 paper bill would still have that $20 face value, but in purchasing power, you wouldn't be able to buy anything near what you can today, versus that $20 gold coin from 60, 70, 80 years ago has retained the purchasing power.
And we haven't even started to see the type of depreciation in the value of the paper currency, because if you look at what the Fed was doing since 1933 to now, and you compare it to what they've done since 2008, it's orders of magnitude worse what we're doing now, isn't it?
Yeah, it's pretty mind-boggling, the level of stimulation and new currency creation in the past 5 to 7 years.
So if we've lost 97% over the past, since 1970 when we came off the gold standard, then what we should expect over the next 40 years is probably going to be much, much worse. Would that be correct?
I don't think it'll take 40 years. I would expect you'd see the culmination of the dollar's trip to zero. I don't think it'll take 40 years.
And do you think any of the political tensions that we're seeing over in the Ukraine right now, do you think that poses a risk for the U.S. dollar?
It poses a massive risk for the U.S. dollar. The main risk that we're already seeing is that Russia instigates a move away from the petrodollar. We've seen Russia announce movement on a deal with China to trade oil and natural gas outside of the dollar. And just a report here today, Wednesday the 25th, I believe, that they're working on deals with India as well. So the main risk for the dollar as far as Ukraine is Russia really accelerating the global move away from the dollar. And we're not even just talking the BRICS anymore. But that's the main risk for the dollar in Ukraine.
Now, if you're a little country like Libya or Iraq and you decide that you want to start taking gold settlement for your dollars, then it's pretty easiest for the CIA to go in there and instigate a revolution, or to just outright bomb you with a shock and awe campaign. But if you're Russia and China, that's a little bit bigger country for us to go in and think that we're going to assert our will and tell them that they have to take dollars for their oil, isn't it?
Yeah, you're not able to just go take the country over and install a new puppet regime who's going to continue the petrodollar.
So, if we lose the oil trade being settled in U.S. dollars, that's pretty much going to remove the U.S. dollar as being the world's reserve currency. How much longer do you anticipate that the U.S. dollar would stay the reserve currency?
It's going to be a gradual process of erosion. I think you're looking at probably on the short term 3 to 5 years, and the long term maybe 10 to 15 years that it has left. Is what I view of the dollar's status as the reserve currency.
And then we talked about how America's often stuck her nose into the business of other countries, and we've been able to do that largely because of having the reserve currency, and that reserve currencies allowed us to maintain a larger military than the rest of the world combined. If we lose that status as having the reserve currency, and when that day finally arrives, do you think the shoe will be on the other foot? Will other countries be dictating to America what they want us to do?
I mean, sure. I mean, it'll be a process. I don't view it as the end of America, but it will be the end of America as an empire.
And then what type of price levels would you expect in the precious metals markets when the dollar finally loses its reserve status?
When the dollar finally loses its reserve status and we see the culmination of the 10 to 15 year secular bull markets in gold and silver, I think on a very conservative side, we'll see silver at a valuation of $150 per ounce, probably higher than that. Realistically, probably somewhere between 150 and 500, and gold is probably going to be anywhere between 5 and 25,000 an ounce, depending on what the final parabolic mania looks like. Now, how long it stays at those levels remains to be seen, and the big thing really in that type of scenario would be the purchasing power of other assets you could exchange them for at that time.
And do you have any price targets for 2014?
For 2014, I think for silver, we'll definitely see silver challenge the 25.50, 26 level that served as support before the big takedown we saw last year, which saw silver test the $18 level twice. I think it's pretty clear that the $18 level was the bottom. It first reached that, I think, June 28th in 2013, and again on New Year's Eve of 2013. And about 10 days prior to that, I had stated that I thought the metals were in the process of bottoming and would bottom by the end of the year for a variety of reasons, including tax implications with investors, especially the hedge funds, looking to book gains on their shorts throughout the end of the year. And it's really what we've seen. Early 2014, we've seen about a pretty decent rally in silver. We saw about 15% move. The past week and a half since the March FOMC statement, silver's been down a bit. It's looking for support here at the $20 level as we speak here Thursday afternoon, and it's been holding the $20 level. It broke it briefly yesterday on Wednesday. I think it touched 1980, but overall, I'm of the opinion that silver has bottomed in the 18 range and will move higher this year and will, at a minimum, test the 26 level.
Did that pullback, did that surprise you, or are you expecting a lot of volatility in 2014?
No, it didn't really surprise me at all. Number one, like I said, we'd had a 15+% rally in silver early this year, and then coincide that with the FOMC meeting and Janet Yellen's first FOMC meeting. And I mean, if you go look back throughout the past 5 years, the performance of precious metals in the FOMC days, it's about 95% of the FOMC meetings that the metals are smashed into the meeting, and then the lows are hit. Usually early Thursday morning is of the lows. You can pretty much count on it.
And then at the last FOMC meeting, they cut another $10 billion out of the quantitative easing program, which I think we need to do. I don't have any problem with them cutting that, but 2013 fourth quarter GDP growth for the U.S. was only 2.4%. That was according to a Forbes article. And with the Fed reducing QE by they've now cut $30 billion a month out, so that's $360 billion annually, or that'd be about 2.25% of GDP. Do you expect a recession in 2014?
I think it's definitely coming. I think you're likely seeing the early stages of it right now. While the official numbers don't substantiate that, I think right now, first quarter of 2014, we're already in the early stages of another recession. Really, do you want to call it another recession, or really the extension of the recession that started in 2008?
Yeah, I think you're right. I think it's just an extension, because if we were printing $85 billion a month, that's over $1 trillion a year, which is approximately 7% of GDP. So if you're injecting 7% of GDP into the economy and your growth rate's only 2.4%, then I guess the real number would be negative
Yeah, exactly. And
Negative 4.6, wouldn't it?
And the jobs numbers reflect that. We haven't had any recovery in jobs. So to me, the recession really never ended. But yes, we're starting to roll over again here in the first quarter of 2014.
So now, what do you think's going on at the Fed? Did they finally get fiscal religion? Are we getting some Austrians over there, or do they see something coming that we just don't know about? Why are they cutting QE so drastically, so fast?
My opinion is they're attempting to save face and have the market basically feel like they have any relevance left and credibility whatsoever. But I think about 6 months from now they'll have to actually start increasing QE again. I believe second half of the year, Janet Yellen's going to reverse course and increase QE. I know just recently Jim Sinclair has stated that Yellen's next move will be to increase QE to $4 trillion a year, which would be a massive increase.
$4 trillion a year. That would be, and the current, I'm trying to think of the current M2 money supply. Do you know that number offhand?
I'd have to look it up. I don't know off the top of my head.
But it would go up significantly if we were printing $4 trillion a year, wouldn't it?
Sure would.
That would really devalue the dollars in our pocket very fast. And then the banks they're always first in line to get that money, so they're able to take it to the casino at Wall Street and make a lot of money on it before it actually gets devalued.
Exactly. Average person in America in Main Street's doesn't have any access to 0% funds as far as loans or lines of credit or anything like that. It's the big bankers who caused the crisis.
Now, what's America look like in the worst case scenario currency collapse? Would there still be electricity in grocery stores, or do you think it's this complete Mad Max environment?
I mean, when you have a currency collapse, the world doesn't end. Sure, you're going to have a lot of rioting and theft, especially in big inner city areas, whether that be places like Detroit or LA or New York, places where half the population have had everything handed to them and suddenly their EBT cards don't work, their electric isn't on, their water's not on. You're going to have problems there, but society will go on, and businesses will adapt with whatever the new currency is, whether that's just purely gold and silver commodity trading or a new gold-backed dollar. I mean, it's really what you see in places like Argentina when they have a currency collapse. It's terrible and your savings are lost, but it's not necessarily the end of the world. Certainly, you can see riots, theft, things like that, and if you have any savings in that currency, expect your lifetime savings to be lost. But for the most part, society, with a slight delay, is able to adapt and continue functioning. Obviously, there's the gaps, especially with the current modern just-in-time supply chain, but the businesses are able to adapt to some extent.
And then I'm looking at the chart from the St. Louis Fed, and they have M2 at 11 trillion. So if we were printing 4 trillion a year, we would double the money supply in less than 3 years, that'd be on the similar track as the Bank of Japan, wouldn't it?
Yeah, you'd see prices start to move pretty quick.
And we've already seen it's almost doubled since prior to the bubble. Let's see, it looks like in 2000 the money supply was right around 5.5 trillion. So we have doubled it since 2000. So when you double the money supply, then that means you have that much more currency chasing the exact same amount of goods and services, doesn't it?
Yeah, there's twice the amount of currency competing for the same amount of assets. Increasing the amount of currency doesn't increase the amount of Apples or Chevys or whatever asset you can think of that you might want, your wife might want. Increasing the amount of currency in circulation, like you said, just increases the amount of dollars chasing those assets, which results in a rise in prices, which the true definition of inflation is the increase in the supply of money, not the resulting increase in prices, which is distorted in a period of hyperinflation or high inflation. It's distorted towards goods of necessity, usually food, things like food first, and then gas and oil, things that are necessities, usually like housing and luxury items often don't increase really in lockstep with some of the more necessity items that are needed for daily survival.
Yeah, the things you have to have, food, toilet paper, things like that you really can't live without, those are the first things to get the price increases. But when you increase the supply of the currency, the price increases, the price inflation is an inevitable consequence of that, though, isn't it?
It is an inevitable consequence, but I just want to make sure your listeners understand the key difference. The government would have you believe that inflation is the increase in prices, and then they can pick and choose what prices they talk about. Like for the CPI, they exclude a whole bunch of things that were included back in the 90s and before in the calculations. Whereas the actual definition of inflation is the increase in the supply or quantity of the currency. And then the change in prices is a result of that inflation in the money supply.
Now, China's manufacturing industry slowed down for the past 5 months. Do you think that's going to decrease the Chinese demand for precious metals, or do you think they're just going to keep stacking anyway?
We sure have not seen any even slowdown whatsoever in the Chinese demand for gold. Just looking at the numbers here right now, for 2014, we haven't quite yet reached, I think the big spike in Chinese demand started in 2013 with the big takedown in gold. But Chinese demand this year for gold, it's closing in on 500 metric tons already. It's, I believe, up about 30 to 40% from 2013. So we sure have not seen any slowdown whatsoever in Chinese demand for gold.
And then their government encourages their citizenry to purchase gold and silver, don't they?
Yeah, they sure do. And the Chinese demand, we're not even looking at the PBOC purchases. China hasn't. It's been a few years since China has publicly admitted their gold reserves, and I'm expecting in the next year or two they'll update their gold reserves and they'll announce a number somewhere between 5,000 and 10,000 tons.
And you think that'll be inaccurate? Do you think they're going to tell us the truth?
Well, I'm sure it'll still be lowballed, but it'll be drastically increased from the last time they reported their reserves.
But if they're still looking to acquire more, they may lowball it even more just to keep the price down until they're finished acquiring what they want to have for their position. Do you agree with that?
Yeah, that's I believe, the main reason why they have not updated their reserve total in the last 5 years.
And then while we're on that subject, do you think there's price manipulation in the metals market? And if so, who do you think's doing it? You think it's the U.S. government? You think it's China? You think there's some cabal of central bankers working together to keep it low?
Yeah, I mean, it's pretty well documented that there is manipulation in the metals market. I talked a little bit ago about the coincidence of metals being smashed every time the Fed meets. Anytime there's a major news event that might affect other currencies or the dollar, gold and silver are smashed. I think back to, I forget if it was 2012 or 2013 in November. I think it was 2012 when the Swiss franc was pegged to the euro. 5 minutes prior to the announcement, in thinly traded overnight trading, gold was smashed out of nowhere on no news, and it was 5 minutes prior to the announcement that they were linking the Swiss franc to the euro. And you'll see that repeated over and over again. And as far as who's responsible for it, whether it's China or the the U.S., I'm of the opinion that it's of the U.S. Attempting to hold on to the reserve status of the dollar.
Well, both parties sort of benefit, don't they? Because we can prop up the dollar, and then China's able to continue to acquire more at a lower price.
The U.S. benefits in the short term, China benefits in the long term.
And then back to our conversation about money supply. In addition to what's printed by the Fed, that all ends up in the banks, and then they're able to lend that out through the fractional reserve banking system and increase the money supply tenfold of everything that's newly created by the Fed, if they ever chose to lend it out, which I think right now at these interest rates they have a better time taking it to the derivatives market and putting it on the roulette wheel at Wall Street.
Yeah, that's what you're seeing for the main part in the derivatives market, exactly.
Now, we've heard the government stockpiling ammo. What are your thoughts on ammo as a store of value or perhaps even a barter currency?
Yeah, the governments are indeed stockpiling it. With our contacts with SD Bullion, we're seeing that directly. A lot of manufacturers for a lot of different calibers, they're basically selling every round of production directly to the government. And we've seen such crazy agencies as the IRS and the USPS purchase billions of rounds in addition to the DHS and FBI, CIA, every other acronym agency you can imagine. So outside of gold and silver, like you said, it is, in my opinion, one of the best potential for investment over the next 3 to 5 to 10 years. And we've seen that over the last 3 to 5 years. Ammo has really outpaced almost everything as far as the increase in value, especially with a lot of the hard to find calibers, whether that be 9mm or 22. Some of the other things that, say, a year ago were also nearly impossible to find are starting to free up a little bit, such as like the 223. And we're starting to see, like the 7.62 with the Ukraine situation. The tall ammo was one of the more inexpensive rounds we carried at SD Bullion. They stopped exporting to the U.S. So while all the U.S.-made rounds are more expensive or available, they are more expensive, being the brass case versus some of the cheaper steel case stuff that a lot of people preferred, like using for target practice, where they can get a lot more practice in without spending quite as much on the ammo.
And then I should probably add for our listeners out there that may be thinking about stockpiling ammo for bartering purposes, that's a great idea within your mutual assistance group or your community where everybody's sort of relying on each other for security, but you might not want to use it as a bartering item with people outside of your mutual assistance group, because they may actually use that same ammo to come around and rob you the next day. So keep that in mind if you're thinking about using that for a barter currency. It's great for within your mutual assistance group, but maybe not so much when you get outside of that mutual assistance group. Now, unlike U.S. dollars, which can be created by a keystroke, ammunition requires effort. You've got to mine the materials out of the ground. Then you've got to manufacture it. It also has utility value because it can be used to provide security, or if you're somewhere where most people, there's some type of, if we had a complete societal breakdown, there's usually some types of animals around, whether just the birds in the trees or whatever, or deer or wild hogs or whatever, where you can hunt. So ammo can also be used to provide food. So can you tell us a little bit about the Silver Doctor's lead bullion program?
Yeah, sure. We launched lead bullion sales in January of this year with our new SD Bullion website. And we kind of launched it with that perspective of what we've just been discussing, with the investment idea, the fact that not only is it a necessity for your preppers and for preparing for a societal collapse, but it also has really strong investment fundamentals as well. So we launched lead bullion sales in early January. We had acquired a lot of the allocated products over about 3 months' time leading up to that, and when we made the announcement on Silver Doctors, pretty much all the allocated products we were sold out in an hour. That's how the kind of demand we saw. The 9mm and 22 was sold out within an hour. So we've continued to expand the calibers and manufacturers that we offer. We're looking to expand into guns as well, as we kind of have an outlook and a philosophy. I mean, we're preppers. We understand the prepper mindset and what they're looking for, and we're looking to help Americans prepare really completely as much as they can. So that's kind of why we've launched a lead bullion as well as some survival food. With my medical background as well as my wife's a nutritionist, I have a strong belief in organic food and avoiding the synthetic chemicals and genetically modified things. So we've launched some organic survival food and vitamin line, really to help protect people from what is sold today as food supply that really can hardly be called food.
Yeah, they put some crazy stuff out there, for sure. So we're going to have links to your website in today's show notes, and folks will be able to go on there and they'll be able to buy silver and gold bullion or lead bullion, which if you're going to buy that stuff, the time to buy it is now when it's plentiful. Don't wait for the next Feinstein gun scare to try to stock up. It's everybody runs for the door and they think everybody's kicking themselves. Oh, I should have got it last week. I should have got it last month. I should have stocked up when it was cheap and when it was available. And now that I can't get it. Now everybody really wants it. And we see those same types of things when we get these violent moves in the metals. When silver shoots up, we get supply crunches. And then oftentimes last year when we had the big dip, we had a big supply crunch on the dip, which was sort of an anomaly that you don't really see in the economics world, where you have a supply drop at the same time you have a price drop, but that's what happens sometimes, and you have to get these things while they're available, and just keep on stacking. But now for the folks listening on Stitcher and iTunes or YouTube, can you tell them where they can find your website?
Yeah, the financial analysis and news website is silverdoctors.com, and the bullion website with gold, silver, bullion sales, as well as the lead bullion and all the survival food is sdbullion.com.
Doc, thanks again for taking time to come on the show.
It's been my pleasure. Thanks for having me.
Oh, absolutely. Hey, Preppers and Patriots. American Meltdown, the long-awaited sequel to American Exit Strategy, is now available in Kindle and paperback. In American Meltdown, Book 2 of the Economic Collapse Chronicles, the new president, Anthony Howe, signs an executive order banning all semi-automatic weapons. Matt, Adam, and Wesley Baer begin training with their local militia for the battle that is coming. Within weeks of the inauguration, the $700 trillion derivatives bubble pops when rates on U.S. debt skyrocket. The derivatives crisis is the final nail in the coffin of the banking system and the death of the fiat currency system in America. With the dollar gone, commerce comes to a screeching halt. While times prove to be tough for all, survival favors the prepared. Get your Kindle or paperback copy of American Meltdown, Book 2 of the Economic Collapse Chronicles on Amazon today.